Camera! Ready? Vintage one, take one.
So when you are selling your asset, right, your plan, and you get cash 245, so you increase your cash, so you debit your cash under investing activities, and then you debit your cash, so you should credit your disposal account. Yeah, so this is plan. Yeah, so here we have loss, and then we have debit, we have credit, right? Okay, and then you have your another additional about gain on sale of patent, actually from the patent purchase at a cost of 200,000, mean the patent must be decreased again, right? We have credit entry for blue, and we have orange for debit, right? So once you're selling, you should debit and credit one. So credit must be credit to your pattern, right? So where is your pattern? So find your pattern account. So just simply credit means reduce your pattern, and then debit your, what do we get here? So debit your disposal, right? So you have your disposal account for the pattern, yeah, like this, right? And then we have a plan with a carrying value 245, sold for cash 155. So here is 245 carrying value, mean your property, plant, equipment must be decreased. So you must credit your property, plant, equipment, and then debit what? Because it is a disposal, mean you have to debit your disposal account, yeah, for the plant, right? Okay, for the plant, yeah, debit here. And then we proceed to the property revalued upward 330,000, means you have to debit something when you have a surplus of the revaluation. So debit your property, plant, and equipment. So here debit your property, plant, equipment, credit your ARR, because your reserve increase due to the increase of the value of the asset, right? Okay. Last but not the least of your additional information is about the director have approved a dividend for the year 655. So you have to credit something about 655. Do you credit what? So the dividend actually very relevant to the dividend payable. So then you have to credit your dividend payable, and then debit what? So here, remember, dividend actually is a reduction or utilizing the profit or loss. So you should create debit your profit or loss account, right? So debit your profit or loss account, credit your dividend payable here. 655 and 655, right? So, right? So actually, ladies and gentlemen, what we have here is almost completed of working to prepare your cash flow statement, right? And then the next thing, what we should do is to balance of your account, right? So here the ordinary share 800,000 beginning of the year, ending of the year 1 million. What is that supposed to mean? You have issued share for the year, which is the differences is 200,000, right? So what do we do with this 200,000? Mean you have to credit 200,000, right? Then you have to debit another 200,000, right? So debit what? Debit your financing activities in the name of issuing shares, and then next account you have is a share premium. So here the share premium also from the opening balance of 800 to 1 million, mean there's an increase of 200, mean you have to credit another 200, and then debit your cash flow for 200, mean you issue share, you have issued and received cash out of issue share at premium with a 400 inflow of the cash, right? So now as you can see, the ordinary share accounts already balanced. I can talk from you from this statement, right? So now done. Next, what you should do is to look at other account here. Yeah, the compensation. Provision for compensation. Opening balance is 0 and closing balance is 450. Mean this year we have other charge of compensation, provision for compensation. As you know, the debit and credit balance is already balanced off. So no need to do any treatment, right? Alright. So next, what you should do is to look at the account. What is this tax payable? Yeah. So tax payable here is telling that we have tax payable last year and taxation incurred for the year, and this is the closing balance of tax payable. So as we can see, there is missing figure from the debit side, right? So how much is the missing figure? If you can see from there. Alright. So here from the tax account, we have the opening balance 300, tax charge for the year 654, and the closing balance is 450. Means we have missing figure on the debit side. So the missing figure will be 500, right? So 500. So once you debit, you must credit something. What's actually we have tax paid actually 500, right? And then we have so done with this account. Take it out. Okay, and then next account we have is a revaluation reserve, right? So revaluation reserve here, they're telling you that opening balance we have nothing, means no reserve surplus yet. And then this year there is 30 we credit because of this year's surplus, and then the closing balance is 33. It's already balanced off, so no need to do anything about this account, right? And then you have long-term loan. So what happened to the long-term loan? Opening balance is 440, credit balance is 50. Means what? You have increase of your long-term loan. What happened? You must already acquire another loan. So the missing figure will be 440, 1554 will be 110 on the credit side, right? Yeah. So credit side missing 110. So once you credit, you must debit something. This actually you receive cash out of your financing activities, right? Okay, put it under financing activity. Inflow of the cash. Debit your cash flow statement, right? So done with your long-term loan. Alright, so next thing you should do is to look at your property, plant, equipment. Right here. Yeah. So in your property, plant, equipment, you have opening balance 2130, and then you have surplus during the year 330, closing balance 3605, and then 457 and 245. So you have something missing on the debit side. So what is that? So you have to debit and you have to think, why are they debits? What happened actually? So actually you purchase your property, plant, equipment for the year. So means outflow of the cash. So you have to credit your cash flow out of your investing activities, right? So debit, credit, outflow. And then, so done with the property, plant, equipment. Alright. So next thing, move to the other item, right? This is your pattern. So your pattern, opening balance 600, closing balance is 1055, and then you have dispose 200. So the missing figure for pattern will be on the debit side amounted to 655, right? So once you debit, you credit. What is this supposed to mean? Actually, you acquire more pattern during the year. So it goes to investing activities, outflow of the cash because you acquire the assets, right? Okay, done with your pattern account, right? So now goes to the trade payable. Yeah, what do we have in trade payable, right? So we have opening balance and closing balance. Yeah? So how do we define trade payable? It's about how you purchase from your customer, from your supplier, right? So we just leave it first. We go to other account, right? So here biological assets is where you have 400. You acquire another 115, and then the remaining balance, so the closing balance is 515. As you can see, it's already balanced off. So no need to do something or do transactions, right? And then you have your dividend payable here. Yeah. So the dividend payable is telling you that last year you have 300, this year incur another 655, and then the closing balance left with the 655. So what will happen? So mean you have already, you made some payment for your dividends. How much the payment must be? 300,000. So you have to debit your 300,000 when you pay for your dividends, and then credit your dividend paid under financing activities. Yeah, credit outflow. And then so done with this. we proceed with the inventories. So what we have in the inventories? The inventories here we have opening balance is 320, closing balance is 520. Then we have cost of sale of 3 million. So what is the item? We have opening minus what? Opening plus what? Minus closing stock, you get cost of sale. This is definitely your purchase account, right? So here, I'm not going to provide it for you because I want you to calculate yourself. So here, once we have purchase, so what should we do? We debit as a purchase and the double entry should be goes to cash. No. Yeah? You must remember, actually this purchase will increase your trade payable, right? So you can simply put here. Yeah, so because trade payable got to with your inventory, got to do something with your inventory. So the missing figure must be cash paid to supplier. So you have some figure here. So I want you to calculate for yourself, right? Alright, and then so done with your trade payable. Then goes to the trade receivable. Yeah, the trade receivable here, you have the opening balance 140. You incur more sales. You sales 7062, then the remaining balance is 200. So the missing figure of your receivable will be on the credit balance by 7002. Yeah. So we credit your receivable, debit what? Debit your cash receipt from customer. Inflow of the cash or debit your cash. And then so done with your receivable. Now proceed to the bank. What is this bank? So you want to know the cash flow, right? So actually it shouldn't be open the account because the place is already here available for this bank, right? So our opening will be here and the closing will be here. And then marketable security. Here is also stated clearly marketable security is qualified as a cash and cash equivalent. Definitely no need to do some account adjustment because it goes straight to the cash and cash equivalent item. Right. And then what is this? This is the cash flow. This is disposal account. We have at the cost of 200, you get gain 80. So there's something missing on the credit side. What are there? When you dispose what you receive, you get cash, right? So the missing figure or the balancing figure actually 280 on the credit side means you receive money. So put it 280. So credit your disposal, debit your investing activities, right? So inflow of the cash by 280. Right? So done with your disposal account. Right? And then we have next is your another disposal account. So if this another disposal account is telling you about your plan with a 245 and then you receive cash 145 and 100. As you can see, it's already balanced off, so no need to do adjustment. Why? Because everything is already recorded there. You see? The magic and the beautiful of double entry. If you hold tightly, you won't find any problem to prepare the cash flow statement. And then last but not the least is your retained profit account. So what do you have retained profit account, right? So the retained profit account is about opening balance is 1.1 million and the closing balance is 2.1 million. And then you have increase in your cash for the year, increase in your profit for the year and then reduce because of this amount. So as you can see, you calculate, it's already balance off. No need to do anything. Alright. So later on, what do we have is your account, completed account of cash flow statement. Inshallah, you get reconciliation of your account. So you simply complete all the items relevant, right? So get the figure of your opening and closing, post it here. Then you have no problem. Your cash flow statement is perfect. Okay, that's all for today. Nice to meet you, inshallah. And then we are going to show you the most interesting about our accounting on the block, where it should be in action move. So let's see our movie. Thank you.